What's up, guys? Welcome back to the channel. So we had a crazy week in the stock market. As you can see, my portfolio is back down to $45,000, and we had a loss of the week of $1,566.93. And I actually want to show you my loss on the day. On Friday, I actually lost $1,584.35. And to be honest with you guys, I'm not fazed about this. I'm not worried that my stocks are falling. And the main reason is because I'm a dividend growth investor. What I'm looking at are the dividends I've earned, and I'm looking at owning quality companies that increase their revenue over time and continue to pay that dividend while also increasing their dividend. And so, quick point I want to make about this is the stock market is very emotional. For example, if the Fed Chair Jerome Powell says just anything wrong, he can tank the stock market. If Elon Musk smokes a joint on Joe Rogan's podcast, Tesla shares drop. If Elon Musk tweets Dogecoin shoots up. During the pandemic, Zoom stock was super hot, or Zoom, the company, was super hot, and people bought a stock that was named Zoom but was not the company Zoom. So the whole stock market is weird in that sense that it's emotional, and that is why I love dividend growth investing, is because dividends are based on logic. They are based on the fact that the board of directors looks at their financials, sees how much revenue they have, how much cash they have, how much their net income is, and they use those numbers to determine if they're going to increase their dividend, how much they'll increase it, when they're going to pay their dividend. So that's what I love about dividend growth investing, is that it's all based on real logic, real things. It's not just market sentiment, what's happening in the news and all this other crazy stuff that goes into why stocks go up and down. So in that sense, that's why I'm not fazed about my portfolio dropping in value. Another good thing about it dropping in value is that it increases the dividend yield of my stocks, because I can buy more stocks now. That's what I think. If anybody's feeling bad about the stock market going down so much this past week and so much on Friday, just remember that you get to buy more shares now of the companies you love. So keep that in mind. And I'm going to be revealing my entire portfolio in this video. But first thing, I do want to show you my dividend income. So in April, I actually earned $189.86, which is pretty good. It's less than January, because April's the first month of the quarter, January is the first month of the quarter. And the reason it's less is because in January, if you remember, I got that huge, I want to say $58 dividend from QYLD, when I normally would get $20. So it's actually not bad. I'm about $14 under January 2022. So I still did good. I think February is not going to be a good month, but I think, or not February, I think May is not going to be a good month, but June should be a great month for dividends. And my goal with my portfolio is to hit $200 a month in dividends by the end of it. So I want this yellow bar right here to say 200 when I'm done for the year. And another thing I wanted to bring up, you can see right here, these are the dividends I've earned so far in 2022 after 4 months. And I've already earned over half the income that I earned in 2021. And this is just, like I said, we're just starting the 5th month. So that is really great to see. And one last thing on this chart are my first 3 months of the year. I averaged, I want to say, $195.96 a month. And that was with the huge dividend from QYLD. So we're going to see in the second quarter what my average dividend yield is when I add up all 3 quarters and divide them by 3. And that'll give me a good gauge on how close I am to hitting that $200 a month goal. And if I'm pretty far off on it, probably gonna have to start working a lot more overtime to get that money to invest. So let's go back over to my portfolio. And I'm going to show you a tab that I don't usually go into. And this is the holdings tab, where it's more realistic with their numbers on how my stocks are performing. So I have 36 stocks, which is a lot, but I don't really want to sell any of them because I like them all, some more than others, of course. And you can see I have a cost basis, 41,217.26 cents, and a value of 45,858.95 cents, for an unrealized gain of 4,641.69 cents, with an 11.26% growth or unrealized gain. So let's start with Apple, which is my number 1 stock. I have 5.53 shares, an average price of $97.21, and an unrealized gain of $334.53, which puts Apple up at 62.18%. Honestly, at one point, Apple, I was up 100%. I had doubled my position in Apple, but it's gone down recently. And next we have FRT. I have 11.33 shares, an average price of $74.40, and an unrealized gain of $483.55, which is 57.34%. And FRT, it's actually, I was surprised at how much FRT, how much it's grown, how well it's doing in my portfolio. I wouldn't have expected that stock out of all of them to be so high. And in fact, looking at this chart real quick, I don't even see Microsoft, which used to be my number 2 on unrealized gain. So that tells you right there, Microsoft has dropped a lot. Next, we have AbbVie, which is my 3rd top stock. And I have 11.64 shares, an average price of $93.70, and an unrealized gain of $619.13, which is 56.76%. So this is actually a great healthcare stock that not only does it provide great growth, but it also has great dividend growth, the average dividend CAGR of 10%, which is fantastic. That means you more than double in 10 years. And in fact, you might even double in 7 years. Next, we have ADP, which I'm surprised to see so high up on the list. This is the payment processing stock. This is actually where I work. We have ADP, and I like the platform that we use. And I have 4.18 shares, average price of 144.16, and an unrealized gain of $310.09 for 51.35% gain. Next up is Costco, which is one of my favorite stocks. Costco is always growing, and it's also always growing their dividend by double digits, which is awesome to see. I just got 2 shares from Costco, and then I have an average price of $378.39, and I have an unrealized gain of $319, which is 40.52%. And moving on to Pfizer, which is another great healthcare stock. If it'll load. I've got 31.34 shares, which is an average price of $35.65, and an unrealized gain of 420.79, which is 37.65%. And then Altria, which is, a lot of people call it a sin stock. They're mostly selling tobacco products, but yet they also have a really high dividend yield. And my thoughts on Altria Group as a sin stock. I don't really agree with that just because you do have a choice on what you consume, but that's up for you guys to decide. I have 23.54 shares, which an average price of $42.17 and an unrealized gain of $315.58, which equals 31.79%. So next up is Southern Company, which is a great utility stock and another one that has a pretty good yield, or usually around 4%. The growth isn't that incredible, but at a 4% yield, because it's already got that high yield. And I have 22.85 shares, average price of $57.14, and an unrealized gain of $371.36 for 28.43%. Next up, there's Microsoft, way down on the list. And I have 4.16 shares, $216.40 for the average price, and an unrealized gain of $254.54, or 28.24%. And then next up is Johnson & Johnson, which is a very solid company. They're healthcare, they have consumer products, absolutely recession proof, especially since we had negative GDP. Definitely recommend Johnson & Johnson. They're very solid, even have a solid international market. So 5.17 shares, average price of $144.14 with an unrealized gain of $187.88 for 25.19% in growth. Next up, we have Duke, which is another great utility company. Once again, it's one of those companies has a higher yield and lower growth, but still pretty solid. Still a safe company, and utilities have actually been doing really well recently. So we have 12.46 shares, an average price of $88.06, and an unrealized gain of $275.43, or 25.1% in growth. So next up is Bxmt, which this is actually another stock that used to be performing a lot better. It used to be one of my, I think it used to be my number one stock. Well, I don't think anything's ever beaten Apple, but maybe number 2, 3. But it's gone down recently. However, this is a mortgage REIT, so I can see how they're not going to do very well in the upcoming market. So we'll see if they keep their dividend. So far throughout the pandemic, they kept it. So if I keep this stock or not will be dependent on if they cut their dividend or not. And I have 44.12 shares for an average price of $24.15 and an unrealized gain of $259.98, or 24.4%. And next up is Procter Gamble, another solid recession-proof stock that has just so many name brands that are amazing. Like I want to say Pampers, Tide Pods, Gillette. This is a stock that you definitely need in your portfolio. And I have 5.64 shares, average price of $131.45, and an unrealized gain of $164.16, or 22.14%. Next up is Pepsi. I talk about Pepsi a lot. It's a great stock, although those shares aren't looking too great. 6.66, average price of $140.62, and an unrealized gain of $207.20, and 22.11%. I'm actually curious to see how Pepsi does since they got out of Russia, because that was 4% of their revenue, which honestly is a lot. That's crazy to think that 4% of their revenue came from like that, just one country that's in conflict. It's wild. General Mills, I do love my food stocks. It's got 14.14 shares, an average price of $58.64, and an unrealized gain of $170.97 for 20.62%. It's pretty solid. Next up is Merck, which is a great healthcare company. They also have good dividend growth as well. And we got 11.61 shares for an average price of $73.69 and an unrealized gain of $174.24 for 20.35%. Next is Walmart, which I was actually considering selling Walmart if it'll pop up, just because they have really slow growth and they're not, I don't know, they're just not doing much as a company. Their dividend growth is really bad, but I decided to keep it just because Walmart is going to be a company that's going to last, seems like forever. They're a great recession-proof stock. So I figured, what the heck, might as well keep them. I don't really plan on selling any stocks this year, or in general. I don't think I'll be selling them unless they do something really crazy. But I have 4.16 shares, an average price of $128.25, and an unrealized gain of $103.12, or 19.29%. So next up, we have Stag, which is one of my favorite REITs. It is a monthly paying REIT, and I have 43.69 shares for an average price of 31.35 cents and an unrealized gain of $261.04, or 19.06%. And when I bought Stag, it was because I sold out of a bunch of my REITs that were really crappy. And I just did some research on Stag. I saw one of their top clients was Amazon, and I saw that they were a triple net lease REIT, which is what I really liked in the commercial real estate sector. And while we're on that subject, Good is also one of those stocks where they have commercial properties, big warehouses, distribution centers, which are growing rapidly, or at least have been in the last few years. And they're all on triple net leases, which means the company leasing the property in the building, they pay for maintenance, they pay for insurance, and they pay the property taxes. So basically, you just own this property, this warehouse. The business that's leasing it out does everything, and you just collect the rent checks. It's amazing. And I have 173.46 shares. These are the most shares I own in any company. And it's actually, when I got the stimulus checks, I put them all into this company. And I'd say it's still doing pretty well. I have an average price of $18.45. I think the lowest I bought was around 13 something, maybe even 12. And I think they had like a 14% dividend yield. Now it's like 6 or 7%. And I have an unrealized gain of $449.81, or 14.06%. Next up is Hormel, another food stock that I like. They actually have really good dividend growth too. And I want to say at one point I was really negative on this stock, but it looks like it's been performing well and it's gotten back up in the green. But I will say I've tried Hormel chili and I didn't really care for it, although Spam and eggs is amazing. So just go for the Spam and eggs. And I have 12.86 shares, an average price of $46.96, and an unrealized gain of $69.82, or 11.56%. And next up is O Realty, which is everybody's favorite monthly paying REIT. And I own 26.37 shares, an average price of 62.78, and unrealized gain of $173.65, or $10.49 or 10.49%. Next up is Mastercard, which I have 1.61 shares, an average price of 321.03, and an unrealized gain of $55.65, or 10.44%. And then next up is IBM, which this is a company that I actually used to put 4% of my portfolio value into. As you can see, I actually have only 2% now, and that's mainly because I'm trying to see what IBM's going to do. They are growing their cloud business, which is great to see. I want to say they missed their earnings this quarter. So really, I'm not sure what's going to happen with them. And they did just increase their dividend by 0.6%, which was really bad, especially for a dividend growth portfolio. However, they do already have a really high dividend yield. So it's always something to consider. If they're stable, have a good dividend yield, but low growth, I can handle that. But really, this is one of the stocks I'm kind of iffy on in the future, just a little bit. We'll see what they do with their cloud computing and the rest of their business. But otherwise, I have 7.18 shares, an average price of $120.21, and an unrealized gain of $86.24 for 9.98%. Then next up is Kellogg's, another food stock. And I have 13.92 shares, an average price of $63.89, and an unrealized gain of $64.14 for 7.21%. Then next up is one of my favorite tech stocks, Texas Instruments, which is absolutely insane with their dividend growth rate. I want to say it's 19.78%, something very high. As you can see, I put it at 4% of my allocation just because it's a great company, performing well with their revenue and net income. It also has a low payout ratio and a high dividend growth rate. So I'm definitely going to buy as much of this stock as I can. And I have 7.01 shares, an average price of $161.86, and an unrealized gain of $58.89, or 5.18%. The next up is Home Depot, which is another great stock I enjoy that has a high dividend growth rate. They've got 3.84 shares, $287.19, and an unrealized gain of $50.83, or 4.6%. Home Depot grew like 50% in 2021, but now it's gone downhill a lot. So that's why that unrealized gain isn't as high as it used to be. But I still think it's a great stock. They're still growing their revenue. It's just the stock market's correcting because of the stocks being way overvalued. Next, I have Colgate, toothpaste brand, 7.23 shares, average price of $75.07, unrealized gain of $14.30, or 2.63%. Looks like next we have American Waterworks. And this is my first stock that's in the red. And I want to say I thought it used to be in the green. I don't know why American Waterworks is going down when it's a utility stock. Water is essential, but I believe this is a great recession-proof stock. But like I said, stock market is emotional, it's irrational, and I have 7.636 shares, an average price of $155.80, and an unrealized loss of $12.66 for a 1.1% loss. Next up, I have RYLD, which is an income stock I own, the newest addition to my portfolio. I have 48.84 shares, average price of $23.03, and an unrealized loss of $44.55 and 3.96%. And next up is Jeffy, which is another income stock. And I have 34.91 shares, average price of $61.48, and an unrealized loss of $101.24, and which is 4.72%. So next up is LTC, and this is a healthcare REIT. They own a lot of nursing homes, and one of the reasons I bought it was because I figured all the boomers are growing up, or not growing up, they're getting older. They're going to be going into nursing homes, but I don't think LTC has ever been positive in my portfolio. But they continue to pay their dividend, so I keep them. And I have 40.40 shares, average price of $36.25, and a loss of $130.36, or 8.91%. And I like the stock. It's a monthly REIT. So I get that dividend at the end of every month, which is fine with me. QILD, another income stock, one of my highest holdings, 138.47 shares, average price of $22.14, and an unrealized loss of $386.02, and which is 12.59%. And you're sort of seeing a theme with those income stocks. They're all down. However, they continue to pay their dividend every month. And just like all my stocks that are down right now, they keep paying their dividend. So I'm going to keep them until otherwise. So 3M is a company with a lot of lawsuits. And right now, I actually see I have a 3% allocation. I thought it was lower because 3M is also one of those companies that doesn't increase their dividend very much. They do have a relatively high yield, but this is another stock I'm watching. I don't know if it'll survive in my portfolio the next decade or 20 years. We just have to wait and find out to see what they do, if they can make a recovery. So we have 6.02 shares, an average price of $168.26, an unrealized loss of $144.96, or 14.29%. Next is Clorox, which, oh man, Clorox shot up during the pandemic because they were the name brand for cleaning supplies. But since the pandemic is over, either people aren't buying as much cleaning supplies, or they hoarded a bunch of cleaning supplies so they don't need them right now. And Clorox has tanked. I think at one point it was down 30%. So we have 3.97 shares, an average price of $168.89, and an unrealized gain of $101.07, or unrealized loss of 15.05%. And next up is Nuci, which has also taken a beating. Is my last income stock, and it has been performing the worst. So one interesting thing about Nuci is they have the put option that they do at the end of every month, which is supposed to help you for downturns, but it's really only helping you for major crashes in the market. It does not help you for slow burns, which is what we've been going through recently. Is the stock market slowly going down over time, and Nuci tracks that and goes down with it. So we have 84.9 shares, an average price of $27.53, and a loss of $418.85, or 17.92%. And then last but not least, my worst performing stock, I'm pretty sure it's always been Verizon, with 23.35 shares, average price of $58.06, and a loss of $274.52, or 20.25%. And with that being said, I'm going to keep Verizon because they keep paying a dividend. And they have low growth. It's all right. One thing I forgot to do is go over my activity feed. And so for the last week, looks like I deposited $125 on April 25th. Or actually that was the week before. So April 27th, I deposited, or no, yeah, 125. I had 6 buys of Texas Instruments, Mastercard, Costco, Microsoft, Home Depot, and American Waterworks. All of those great high dividend growth stocks. Next up, I received $11.45 from RYLD and $28.40 from QYLD. And then I deposited $250 into my portfolio because the market like tanked on Wednesday. I want to say I was down $864. So I thought that'd be a great time to buy. Turns out Friday was a better time to buy, but I mean, you can't time the market. Although I still had 8 buys: Clorox, 3M, Home Depot, Apple, American Waterworks, Costco, Pepsi, and Texas Instruments. And I actually bought a lot of Texas Instruments, so I was happy about that. So I'm not complaining there. Then I received my end of the month dividends. Altria, $21.19, Good, $21.75, and LTC, $7.68. And so guys, that is the end of April. That's the end of the video. Thank you guys for watching. Subscribe if you want to see more content like this. If you made it this far, which I know is about 13% of you guys, go ahead and like the video. It helps out the channel. It's absolutely free. And if you guys would like, there's a link in the description for M1 Finance and Webull, where you'll get free money or free stocks. So thank you guys for watching, and I will see you next week.